Hello and welcome to this video on the trade cycle, sometimes known as the business cycle. So to start off, we need to think about GDP. And if we recall, GDP stands for Gross Domestic Product, the final value of all goods and services produced within a country in a year. And if we look at it from the UK's perspective, then this is what happened to UK GDP between 2006 and towards the end of 2013. And what this chart tells us is, first of all, what is the level of output within the economy for each 3-month period, which would give us an indication overall of the total size of the economy, which we know to be roughly £1.5 trillion within the UK. But when we look at it more closely, we can actually see that what seems to be happening to our economy is there seems to be a pattern developing, or a cycle. Periods when GDP is rising and is quite high, periods when it's falling, periods when it's at a low level compared to what it might be, and then periods again where it looks like GDP starts to recover and starts to go up. And we call these fluctuations in GDP over time the trade or business cycle. So the trade cycle describes how the economy tends to show recurring trends in economic growth. And there are 4 periods to this cycle that we need to be aware of. When GDP is falling, we describe this as a recession, and that is the case if GDP falls for a 6-month or more period, i.e. for 2 consecutive quarters. When GDP is low and way below trend, we call that a slump or sometimes a depression. When GDP starts to rise, we're still not yet back on trend, but it looks like GDP is rising. We call this period recovery within the economy. And when GDP is high, above trend, we call this period a boom in the economy. And when you look back through history, this cycle plays out in terms of the level of output within the economy over time. The periods aren't necessarily always the same length of time. Sometimes recoveries and booms tend to be quite long, and recessions are quite maybe sharp in shorter periods of time, but the economy does tend to go through this cycle. So we need this diagram down in our notes, and then we're going to look at what we would expect to happen within each of these stages. So let's start off with a boom. What would we be expecting to happen during the boom period of the trade cycle? Well, if GDP is high and national income is high, we'd expect there to be a high level of consumer spending. As a result, businesses should be quite confident about the future prospects for the economy, confident in terms of maybe investment decisions. So we will see rising profits for businesses and investment. Now, because the economy is operating near full capacity, there's a large amount being produced. We tend to also see, when there's periods of high demand, prices and costs starting to rise, and therefore higher rates of inflation. A large amount is being produced, which tends to require a large amount of workers, so we would assume that during a boom, unemployment would tend to be low. So as a result, we'd expect the government's finances to be quite strong. Not much government spending on things like welfare payments, unemployment benefits, and if profits and incomes are high, then we'd expect quite a decent amount of tax revenue, so probably a government fiscal surplus. What about during the course of a recession? Well, we would expect falling levels of consumer spending when the level of output is decreasing. In particular, a big feature of recessions is lower confidence. People see GDP falling, less is being produced. There's more uncertainty about whether the economy is getting wealthier, whether there is going to be as much job creation, for example. So lower profits for business, and consequently, businesses start to cut back on investment. If there's lower demand in the economy and spare supply, we'd expect to see deflation or certainly disinflation, a slower rate of inflation. Spare capacity increases, and we'd expect to see rising unemployment and a worsening fiscal balance. As more people are made unemployed, benefit payments will rise. As profits and incomes fall, tax revenues will fall, so we'd expect to see more of a fiscal deficit. So we looked at boom and recession, Now let's look at recovery and slump. During recovery, we see consumers beginning to increase spending. Businesses feel a bit more confident and start to invest again. But it might take a bit of time for these effects to really be felt and for unemployment to stop growing. During a slump, we would expect to see very weak consumer spending and business investment. We'd expect also to this stage to see business failures. So maybe businesses can withstand a recession, but wouldn't be able to withstand a slump. Again, we would expect to see during this period rapidly rising unemployment. And lastly, we'd expect to see deflation, low levels of demand, spare capacity, so price levels starting to fall. So in this video, we've looked at the ups and downs of the trade cycle. That's it. Thank you very much.